In the 2023-2024 financial year, the Kenyan government targets to raise 2.8 trillion Kenyan shillings. The Finance Bill 2023 has been described by some as ambitious. Earlier, the CEO of Rich Management, Alykhan Satchu, shared his thoughts on the bill.
Businesses have been under pressure. We saw the markdown in GDP that the KNBS reported yesterday. The businesses I speak to are all complaining about the business environment that they're in at the moment, and then the aggression with which the KRA is seeking to collect taxes. So, I understand we're in a fiscal problem right now, and possibly that the IMF is running a lot of these tax proposals through the Treasury. But I think it's a very complex scenario right now. We've got to address the fiscal side. I think the government is doing that. It's pivoted back west. It's leaning on Western partners and the multilaterals like the IMF and the World Bank. But I think the underlying issue here is that the cost of government, the recurrent expenditure, is just too big for the taxpayer to bear. And really, the government would be better advised at looking at how to cut costs within its expenditure than trying to raise taxes on the other side. And maybe they're going to use the IMF and the World Bank as cover to look to reduce that expenditure. But I really think that's what they have to address. Otherwise, this is not a sustainable scenario, in my opinion.
Alykhan, looking at the Finance Bill 2023, come July, if it should come to pass, some people's salaries will be taxed, especially if you're earning more than $500,000. And the president had alluded to taxing more of the wealth. Is this what it is?
This is the symptom of the disease. Now you're going after salaried employees much more aggressively. You're taking a bigger bite out of their income. You're trying to take a bigger bite out of everybody. And I think, post-COVID, people haven't felt the economy recover. And if you're going to overtax an economy which was once the low-tax economy in the region, and therefore was the destination of choice for everybody, including entrepreneurs, and you're now moving into a high-tax economy, whether it's at the employee level or the company level, or just generally operating a business level because of the taxes that we see on things like fuel. You're not making it as attractive a destination as it could be. And if you make it an attractive destination in my opinion, with a lower tax rate across the board, you're going to collect more in taxes. We know what happens. If you take taxes too high, everyone's trying to evade them. And just generally, your tax collection does not improve. It might look good on a spreadsheet, but unfortunately, the take doesn't reflect it. And I think we're at that tipping point moment in the Kenyan economy. And I think we really need to think very, very hard. I understand they're under tremendous pressure. They inherited a situation which was very difficult. We had overborrowed, misspent. We're trying to right-size that. But at the same time, I think if you're going to right-size it, you've also got to show that you're prepared to take some sacrifices at the government level. It can't just be employees, it can't just be companies, it can't just be the private sector.
Another section that I want your thoughts on is a turnover tax. Tell me, what will be the implication of this, especially on the SMEs?
Well, you see, here again, I think philosophically speaking, a turnover tax, what the theory behind the turnover tax is, this is the quickest way to bring people to widen the tax net, bring more people and companies into the tax environment. So I understand that, and because we have a very narrow bunch of taxpayers, I think it's something like 2 or 2.5 million in a population of 50 plus, doesn't make much sense. But I think it's a very blunt instrument, a turnover tax. Some businesses genuinely don't have big margins. So, it effectively means you can't do business, low margin business, because you're going to get turnover taxed out of existence. So it's something I think that is not necessarily as well thought out as it might appear.
All right, so let's talk about the digital assets tax. We see the government is targeting the cryptos, but on the other hand, we see CBK warning against the cryptos. Are we seeing a contradiction here?
So we have a bifurcation between the central bank, which has been until now very anti the cryptocurrency space. The central bank governor has spoken out severally against it. And spoken of losses that crypto investors would face. However, the government's looking at the fact that, crypto is quite ubiquitous in Kenya. Kenya ranks around 7th on a GDP basis in terms of the embrace of cryptocurrencies. So it's pretty high up there. And I think the government saw this as a maturing financial ecosystem where they could start now to gently milk the cow, as it were. I think it's a mistake. I think it's a bit early. And also, this proposed tax of 3%, it's another turnover tax. Now, what happens if you've bought and sold them and you haven't made a profit of 3%? I think, these numbers are being put out there which are not cognizant of the reality of trading these cryptocurrencies. I think they've gone way too early. I think they should have let the ecosystem gain more oxygen and develop, because this was something that was a dynamic part of our economy.
As we bring this to a close, Alykhan, do you feel that there is value for Kenyans, even as they, dig deeper into their pockets to pay more taxes in the midst of inflation and high cost of living? Is there really value for their taxes?
So this is the key question, and this is why I was arguing that we need to reduce the cost of government. I think the cost of it is too high for the average taxpayer, Kenyan taxpayer, to bear. And therefore, instead of burdening the taxpayer with more taxes, we should be reducing the scale of the burden on their shoulders.